Welcome back to the Stuff About Money They Didn't Teach You in School podcast. I am certified financial planner Erik Garcia, joined by Xavier Angel, certified financial planner. And we have a special guest today, Daniel Prudhomme, who's not a certified financial planner, but maybe he might be out there giving some advice that's as good as some other financial advisors. We wanted to have him on the show here. So Daniel, welcome to the show. Some of you who have listened to my previous show, the Building Us podcast, you'll remember Daniel. Daniel and his wife were on. Daniel was early on, man. Y'all were maybe first 10 episodes. And we did a series on interracial or biracial marriages. And I think you talked about how you and your wife are ending racism with your generation or something along those lines with your boys and just kind of lessons that you're teaching them. But we're not talking about race on this. We're going to talk about a slightly less conversational, slightly less, oh my goodness, I've lost my words.
Your tongue tied.
Controversial, slightly less controversial topic, money. But before we get into money, I want to raise a little bit of controversy here. So, you ever been around someone who drives up in a car, right? And people's heads turn like, "Ooh, look at that car, right? That's a fancy car." Right? Can you think of any cars that might get people to take a second look at you, maybe think, or not you, but it's somebody?
Absolutely, right? Absolutely. Man, Rolls Royce.
Okay, yeah,
Bugatti,
Bugatti. Yeah, there you go.
Bugatti. We were talking about that earlier. Ferrari.
Yeah, maybe some of these trucks these days that are, 6-figure fancy trucks, right?
My 2008 Honda Accord.
2008 Honda Accord. That's where we're going with this. A 2008 Honda Accord will also get people to turn heads. So if you listen to our last episode, and we're recording this one, as we record this one, our last one hasn't even dropped yet. We talk all about Xavier's 2008 Honda Accord, and I can see your keys behind you, your 2008 Honda Accord. So we do this entire podcast on Xavier's hoopty.
So look, I pull out. Grace asked me, "Daddy, can you charge my phone?" And so back in 2008, they didn't have the USB cords or any of that other stuff. So I remember the chargers, the car chargers that are about that long and cylinder. So I pull it out and I plug the iPhone into the back of it and plug it into the cigarette lighter. And Grace, with this look of just I don't even know how to explain it. She's like, "Daddy, what is that?" I said, "Grace, this is what I'm about to charge your phone with. You asked me to charge your phone. I'm using it." How does that charge your phone? That looks like something you stick in somebody so that they survive. So
the iPhone, right? No. So just a few hours ago, Grace was here at the office and my wife picked her up so Grace and Missy could go swimming together. And I walked them out. And Grace had to walk to your car to get her bathing suit. I said, "Grace, your dad's saving that car for you when you start driving." Boy, that look that she gave me cut, dude. It cut. It was a violent look.
So, Daniel, I'm gonna recap on our last conversation that we had, so you know where we're coming from.
I want you to recap on your last conversation, and then share the story that happened the day after we recorded.
Okay, gotcha. All right, so. My son graduated from Notre Dame last month in May 2023. He graduated. So
Cliff Notes version.
Part of the graduation was I gave him my 2020 Honda Accord. Paid it off, gave it to him. So now I'm stuck driving the car that we had for him locally when he was here. He had a 2008 Honda Accord. My goal is, and everybody keeps saying, "Why don't you go buy another car? Why don't you buy another car? Go get one." I've got a specific goal in mind of what I want to accomplish over the next 3 to 4 months. And because I'm trying to accomplish this goal, I've put off purchasing a car until the earliest of September 1st. And so because I'm not looking to go out there and buy the car, get stuck with this note and the insurance on it, and then get sidetracked on what my goals are. So that's why I'm still driving this 2008 Accord.
That's why he's turning heads with the 2008.
I'm turning heads, yeah.
I get it. Hey, sometimes you got to be laser focused to get it done, man.
Right. Absolutely. And it's so I bring this, I'm sitting there with the client and I'm telling her she's got this goal and we're talking about this goal that she needs to accomplish. And she tells me, "You're hurting me. You're killing me. I don't know how I'm going to do it." And I told her, I said, "Well, look, nothing is easy in life. And if you want to accomplish your goal, there's going to be a little bit of pain. So you have to give up some of the things that you enjoy doing to meet that goal."
i.e. air conditioning in your car. Oh, so we record this podcast, and I think literally the next day, Xavier,
Right.
I think you call me.
So I call Erik and I'm like, "Dude, you're not gonna believe this conversation." So I'm sitting down. I get to the coffee shop early, sitting there waiting for the client. The client walks in with her two business partners, and they sit down at the table, and they had made a bet on what type of car I drive. And so through this conversation, I was like, you know, I was like, "Well, what do you think?" I asked one of the owners, "What do you think that I drive?" And she said, "Well, I'm telling him you're probably in a Lexus, a Honda Accord, or a Mercedes, somewhere around that line." And the other guys are like, "Well, we're not going to tell you. What do you drive?" I was like, "You saw the gray car out there? That 2008 Honda Accord, that's what I drive." And they just looked at me and they were shocked because I was in that 2008 Honda Accord. But it played into that conversation that we were having when we started taking goals. So they had no idea that's what they were stepping into when they brought that conversation up. But it turned into, look, delayed gratification. I'm going to
Yes.
delay that gratification so that I can meet all the other goals that I have set aside for myself. So it turned into, now I'm even more motivated not to
There
go
you go.
purchase that new car until September 1st, because it's a talking piece. I'm doing what I tell people to do by putting off purchasing that new car.
Yeah, practice what you preach, and now it's hard for them not to listen. Look, one of a very popular phrase from a not so popular guy, according to Erik Garcia, is
Don't bring him up.
Do what you want to do now, so later you can do what you want to do. Right?
Right.
Hold on. In all fairness, you can say who you're talking about. That's okay. Say it.
It's Dave Ramsay. And I misspoke. Do what you have to do now.
No, that's
so
not what it
later
is. If you're gonna quote Dave Ramsay, quote him right. Well, I'm gonna protect the one quote that I love about Dave Ramsay. He says, "Live like no one else today, so you can live like no one else tomorrow."
There we go.
So the idea is you're gonna make sacrifices today when everyone is just living for the moment, so that 10 years from now, you can live like unlike them, because then they have to live. I mean, they're still living in the moment. They got no money.
Yeah.
So
Right.
You can evoke Dave Ramsay. I'm not threatened by Dave Ramsay. This is actually one of the reasons why, Daniel, I wanted you to come on and chat. I remember we were having lunch maybe 2 or 3 months ago, and I remember the specifics of the conversation. Xavier and I had just recorded that morning our podcast on liquidity, on the importance of having liquidity. We were eating lunch and I was sharing that with you. And then you kind of shared some personal stories, your story about money. And I'm like, oh man, we got to get you back on the podcast. I love kind of your perspective and where you're coming from. So I want to hear all about that, but I want to come back and focus on one thing real quick that the two of you were just talking about, which I think is really important. And we see this a lot in childhood development. Just from what I hear from my therapist friends, in childhood development, that our kids will learn more by watching us and by what we do than what we say. Yes. So where it's important that we give good lessons, it's more important that we actually live in live out the lessons that we want them to pick up on. So, Daniel, you made the comment about Xavier, how, well, you're living your advice, and Xavier's like, man, I'm even more motivated because this is a teaching lesson, how important it is for us to be consistent. I guess we call that integrity, right? To be consistent with what we say and how we live. And that's where I want to go with you. I know you have 3 young boys, and you're raising them to be good stewards with their stuff. You're raising them to be good humans, good citizens. And I want to talk specifically about money, the lessons that you're teaching them, because I know one of the things I have a ton of respect for you is how intentional and purposeful you are with not just them and in your own career and your own profession and your marriage and your friendships, and I got a ton of respect. So like let's just start with like share a little bit about who you are, where you come from, and let's kind of see where that takes us.
Yeah. So I come from very humble beginnings in Southwest Louisiana, a very rural town of about 2,000 people, and that's on a Friday night with the home football game. So that's that's packed house. And it's interesting because my father was a truck driver who made less than a teacher's salary, and my mom was a housekeeper. Right, she would sit with the elderly, half a day, who made probably half of that or less than half of that. So, 4 kids in the house. And, there were times my father being a truck driver, he drove a dump truck. So sand, gravel, asphalt, those are all components and materials for construction. Well, when it's cold and wet, construction tends to cease. So during the winter times, there were a couple of winters where, my dad would be home for several days straight, and we had to go and get help. We had to go to the unemployment office for a couple of weeks. He was never one that would accept it long term. He would have found something else before he did that. That's not who he was. But we had to go and get assistance a couple times, and I remember that clear as day. I wasn't embarrassed, but it left a mark on me. And what's interesting, you talk about the say-do ratio, was what I like to say. My dad would always say, save your money. Save your money. What does that mean? Like, what did that mean? And so for me growing up, save your money meant save it until you found something to spend it on. Right? You save it, it be a couple of weeks, and all of a sudden this shiny little thing comes and you're like, gotta have it, gone. And so I didn't really understand what that meant, but what I saw, so that's what he said, what I saw was that every single Wednesday, he got paid on Wednesdays. Check came in, he would sit down with a notebook and a calculator and do all the bills and then have it written up, and my mom would take the check, cash it the next day, and boom, 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 everything worked like clockwork, right? And now that I'm talking about him and the saving of money, he did not do a lot with banks. Something happened in his younger days where he got burned. I don't know if it was him on insufficient funds or something else, but he was non-bank until, man, I was probably close to 30 years old before he went back into the banks.
Oh, wow.
But he always, and now that I'm thinking about this is funny. He always had a secret compartment in his wallet. He had the general fund in the wallet, and there was always his back. And to this day, I've never bought a wallet with a secret compartment. So I wonder if he took a knife and cut a slit to make that back, I've never seen a secret compartment in a wallet. Have you?
I think he cut it in there.
Yeah. But it was brilliant because that was his emergency, right? If every now and then through fun you would see it, but most of the time, and somebody had to go to the ER or something like that, that's when you see he'd get to that little pocket. And I thought, man, we never knew how much he had in there, but that was his little secret compartment of emergency funds.
That's funny. Xavier, I don't know if you remember this. We went to D1 had a concert at the Howlin' Wolf, and Xavier and I went. And there was like a pre-session where people could get in early and ask questions. I forget the exact question I asked, but he was sharing his story about his grandfather, and he said, maybe I think his car broke down or something, and he needed money for a car, so he's talking to his grandpa. He says his grandpa walked up to the vinyl records and pulled out a real specific record and pulled out like 25,000 cash.
Look, Erik, we talk all the time about purpose in your accounts, especially with savings. That's all they're doing. But they were doing this 25, 30 years ago, just in a different way than what we're doing it today. It was genius.
Yeah. So you'd watch your dad bring home the check with the notebook, and your mom and your dad will go through or pay bills, or whoever would pay bills, and you would watch this. How do you, today we don't have, who writes checks today, right? Everything's done digitally. Everything's done automatically. Okay, maybe you
I wrote you a check last week.
You did.
I still write checks.
So here's my question. How do we do the do part of this with our kids? If we're talking about the importance of kids watching our actions, if we pay everything automatically, they don't see us set it up automatically. They don't see us pay bills. They don't see the I'm going to say struggle. They don't see the struggle.
Yeah.
How do we show that? Do we need to?
I think that is an excellent question. I think one of the hardest things to do is teach that in this digital era today, right? Because that's one of the things that resonated with me with Dave Ramsay, because you can feel the cash, you can see the cash. Looking at a number on the screen doesn't hurt nearly as bad, right? If I'm, in college, you get down to $20, you're calling home saying, hey, I'm almost out of money, et cetera. It doesn't hurt as bad on the screen, especially with the era of credit cards today. So I purposely try to work with my kids through cash right now. They will get debit cards at some point soon, but I work with them through cash. So when they get allowance, when they get birthday money, Christmas money, I make them put 10% up. We actually, my wife found this cool little bank. It's a cylinder, and it's divided into 3 up top, and it's give, save, and
spend. Give, save, spend. Yeah.
Yeah. And I put that in there. Now, they're not always honest. As a matter of fact, one of my kids' banks is in my room now because he wasn't honest last year. And I don't really keep a spreadsheet per se, but I kind of got an idea. So at the end of the year, I have them go and say, okay, you're saved, let's go put it in the bank. Your give, let's go pay tithes, let's give it to this charity. So I'm having them try to learn that at this age, because it was really hard for me to learn. So I will tell you, like my very first job, I was so proud. I worked at a fertilizer plant in my small little country town. I mean, I drove forklifts, front end loaders. It was back-breaking work with the shovel. I was 14 years old. I could have died out there. Like there was a couple times I was like, what in the world? But I made over $1,200 in 6 weeks. I mean, that's bank in 1992, right? And I saved that money until in the summer, and I bought all my school clothes. I bought my class ring a year early because I knew my parents probably couldn't afford it, and I wanted a nice class ring. So I did all these things. So once again, I saved until I found something to spend it on, right? I get to college, and same thing, right? I started waiting tables and managing at a restaurant. Well, problem with cash, I saved until I wanted something. But it was almost detrimental, because if you were short on cash, you just go pick up a shift waiting tables and you got 40, 60, $80, boom, right there. So it's the habits still were not formed. I was still having to work through this, right? I was taking care of everything, my rent, my truck, and all that, but it's still, the habits weren't formed. It wasn't until my first job after college, my first career job. I had a mentor, Adam Hitch. I will never forget this. Adam Hitch sat me down and he drew kind of like a sine wave, right? And that sine wave continued to go up. And he started talking about sales and how you're going to start at the bottom in sales and you're going to have peaks and valleys. But hopefully, your valleys will never be as low as that first valley, right? You'll still keep going up. And he taught me about saving. He told me about saving for 3 months emergency expenses. And then he also told me about the fact that we were probably close to a 50-50 OTE on target earnings. So he taught me about the dangers of living expecting commission. So from 2002, 2003 to now, my budget is built on salary. My budget is not built on commission. Now, that's a whole lot easier for me to say, having commission coming versus somebody with a salary. But the bottom line is you have to live below your means. I can't rely on that variable of a salary. So I try to build everything around variable of a commission, sorry. So I try to build everything on my liquidity on salary alone.
So for those that don't know, when you start living off of that commissions are going to be that you just talked about, those peaks and valleys. I mean, 1 month you're making money, the next 2 months you may not do anything, and then you get this big commission, and now because you're trying to catch up from where you left off at, you spend everything that you made in that particular month. So I love that. I love that concept.
There's an economic term. It's called consumption smoothing. I don't know if you're familiar with it. So the idea is, and we do this in our life, particularly if we live on variable incomes, is you basically smooth out your level of consumption despite there being peaks and valleys. So for example, let's say I average 10,000 a month, but 1 month I might make 5,000 and 1 month I might make 15,000. So a consumption smoothing, you see big economies do this as well. What consumption smoothing says is, hey, I'm not going to create a lifestyle off of 5,000 a month. I'm not going to create a lifestyle off of 15,000, but this is a pretty pretty reliable average. I'm going to create a lifestyle off of 10, and there's going to be some months we're lower, some months higher, but on average, I'm going to smooth out that consumption. We do that over our lifetime, where you see this particularly, I would say particularly in the middle class, where we might start off, we're raised middle class, and then we're kind of off on our own, and we're not making nearly as much money as the household that we grew up in, but yet we're still maintaining a similar standard of living, with the expectation that we're going to continue to eventually earn to maintain that similar lifestyle, right? They call that consumption smoothing. It could be dangerous if you don't have that success, but it also is a way to prevent, create some stability in your life. But that's interesting to me. So you build your lifestyle not off the commissions. I work with a lot of guys who sell, and a lot of their income is driven by how much they sell, and it's amazing. And they're successful. And what's amazing is so much of their lifestyle is, I'll just go sell another policy. I'll just go sell another this, and it seems like that could be a trap at some point, right? What if you don't make that sale?
Yeah, right? It's a slippery slope, man. It's a slippery slope. I worked with some guys who were, top of the company, going on sales excellence trips one year and literally taking out a loan by the end of the next year. And I saw it 2 or 3 times in my early career, which then enhanced my belief in what Adam Hitch told me, right? So I got to experience it through someone else a couple times. Luckily not. I was a younger brother of 4 other siblings. So I learned through all their mistakes. And the same thing when I got into my professional career, I saw people with families having to take out loans some years, and they were on top of the world the year before. And I thought, I don't want to have to do that. I don't want that stress, right? So I'm just gonna chill right here,
Particularly in sales careers. I mean, there's a lot of money to be made in sales, and there's a lot of watching what other people are doing, and like being envious of what they're doing. And
yes,
man, you do not know someone else's story. You don't know what's happening behind the scenes. They might look successful, but they might not be. And you might be driving a 2008 Honda Accord, and you are stable, and you're positive about your future, and you're good about where you're headed. You're meeting all your goals. And you know what? So what if you drive a car, right? You're living like no one else today so that you can live like no one else tomorrow, as opposed to that instant gratification. I'm interested to go back and I want to talk a little bit more about something you said earlier about your dad would tell you to save, and you talked about what does that even mean, and you talked about saving until you just find something to spend on. What do you do now in terms of intentionality of saving? Because oftentimes, you talk about 3 months expenses, pretty standard, right? 3 months of expenses for an emergency, very purposeful. It's here, it's going to sit in an account in case something happens, right? AC goes out in July in New Orleans and it's 115 degrees outside, so I need money quick. It's my savings account. Lose a job, I need a little bit of runway so I can find a job. And then there's retirement savings, right? Real purposeful. I'm saving for old Erik. Old Erik's not going to grind it out when he's 60, 65. I'm tired. I'm not going to be able to be as generative as I am now, so I'm going to put some money away for later. And then there's like the savings, which it's not real purposeful in terms of like, it's not for retirement. It's not for emergency. Maybe it's for vacation. Maybe it's a new car. So how in your finances do you save without just making those decisions on what to spend it on?
That's a great question. I don't know that I've ever thought about it in the granularity you just stated. But yes, I invest for retirement. I do my 3 months, and quite frankly, I like to be at 6 months. I'm not there right now. Like I don't sleep well right now because I'm not at the 6 month mark, and we'll talk about that 6 month where I actually had to use that before. We'll get there later. But just through some life things, I'm not at the 6 month mark right now. I'm a little below, and so I, not quite comfortable. Got to get back there. But for me, as I talk about living within my means, when I do have the big commission check, I just throw it over to savings. Just throw it over as lagniappe, and that helps to take care of the vacation, the smaller things that you want to do that may be outside of your regular monthly budget. Get your income tax refund. I'm not going shopping and buying new clothes. I'm not going to buy a car unless I happen to need a car. that just goes away. I think we get this right now gratification too much today, where people, you get whatever, even the government supplemental checks that came, over the last few years with the pandemic, and people were just going out and spending. It's like, what are you doing?
That's the American
Yeah.
thing to spend, Daniel.
To
We got to keep
spend,
this economy
spend,
going.
Yeah. And
So
so
can we pause real quick and do a quick definition, because we got some listeners not in the greater Louisiana area, and you just dropped some Southern Louisiana words, lagniappe.
So lagniappe is a French word that means, Cajun French word that means a little extra.
little extra for free. All right, something a little extra. Typically, you go to dinner and they bring you a dessert for lagniappe, right? And you don't pay for it. Okay. So how do you I'm just curious, how do you determine if I ask a question that's way too personal about money, don't you you can avoid it?
Yeah.
But how do you make that determination where your lifestyle is based off of your salary? At what point do you stash up enough commission money on the side? Do you just say, hey, all that's to spend on vacation and extra stuff? Or at some point, like, do you have a vision of it, like, hey, there's a number that I'm trying to reach, because once I hit that number, I know that money's going to generate, dividends or distributions for me on a regular basis?
Yeah. So great question. I think, so I had to get a new vehicle last year, right? So all of that was stashing away for down payment, right? Got the new vehicle. Now I'm throwing it back over again. I don't have an immediate purpose right now. It's just being stashed away. But that's a really good question, because you have to also prioritize your wants. I mean, I can have a catalog of lists of wants, but are they necessary? Are they a priority? Are they urgent? I got 3 kids. We do a lot of sports. There's equipment there. There's regular school clothes. They have 3 boys. They eat me out of the house and home, right? So as much as I am talking about this concept, I am not perfect at it either. There are times when we use the credit card during the month. There are times when we do things that I would rather not do if it was a perfect system. It's not a perfect system. But that's where the lagniappe, or the extra savings, comes in, right? So if I happen to use that credit card during the month, we have that extra in savings that we can take care of it versus sitting on the interest and letting the interest eat you up.
And I think all of us, for those who get accustomed to purposing their savings and they know I'm putting X amount away and this is what I'm living on, we all know things are going to come up. We know we're going to take that vacation next year. So if we get that extra money and we're still putting that on the sidelines, it allows us to have experiences and do the things that we want to do, so that if the AC breaks, if you need to go buy another car, what if those things happen? Well, I've got the money to do it. I'm not running around trying to figure out, where am I going to get it? Do I need to go borrow it? Am I pulling the money out of my life insurance policy? I don't have to do it. I have it readily at my fingertips.
That's huge. And I try to preach that to, especially my nieces and nephews, adult nieces and nephews, but even just younger adults that I start to get to know, because, I try to have them look at the whole picture. Okay, you bought this used car. Good for you. It's your first car, second car. You're 23, 24 years old. And I keep preaching to save up for emergency. Well, all of a sudden the brakes go out. You don't have the money to get new brakes. So now the car is sitting there rotting in your yard and ends up getting towed away as junk. So that congratulations celebratory moment that you worked so hard for, you just let go out the door because you didn't have anything to support it. So you might have bought the car for $12,000, which was huge, but you never had enough to keep it running. So you just wasted. You might as well go to the casino, right?
Well, it's those people who buy really expensive houses and don't furnish them. I've known those people, right? All their money's in their house and they got no furniture because it's expensive to furnish a house. And
so Erik, you brought up, you asked earlier about the kids. How are we teaching our kids about savings?
Yeah.
And I recently had a conversation with a client, and the client was, they were on the fence about having their children stay at home after they graduate and, living on them rent free and just going out and spending all their money. And so I had a conversation with the client, and what they wound up doing was they allowed their son to stay at home with them after graduation. Son went out and got a job, and the goal was stay with us. You can stay with us for X amount of time, but what we want you to do is focus on saving your income. And they would tell me that they went back and forth. The son was upset and was talking about how they were trying to control his life and his money. Well, fast forward 2 years, and when that son finally moved out and went out there and started looking at rent and what it was going to cost to live in this new city, his parents went to him and said, look, you've been saving over the past year and a half. This is how much you have. You can do the things that you want to do now because you were saving. And I think by working with our children and showing them the benefit of savings early, that's going to give them, they're going to be where we are. They understand that I need to save. When I get these tax refund checks or when I get these commission checks, I don't need to spend the whole thing. I don't need to take 3 and 4 trips per year. So by starting them early and showing them what we do and how we do it is giving them the opportunity to learn from us, from looking at us, from watching us.
There's a story about someone walking through the forest, and they come across this deer that's stuck in one of those bear traps, those claws that if something steps on it, it'll close on their legs. I don't know. You see in the cartoons all the time, right?
Yeah.
Okay. And clearly this animal was in a lot of pain. And this person was empathetic towards the animal, and they're trying to release the animal from this trap. But in the process of releasing the animal from the trap, I mean, it's imputing a ton of pain to the animal, right? Like they're pulling all this thing off the animal's leg, and the animal doesn't know what's happening. The animal thinks that this person is trying to kill it. This person is trying to save the animal, but in the process, there's just a lot of pain and suffering for the animal. Eventually, the animal goes free, goes off, and presumably recovers fine. I think it's the same idea sometimes, where the lessons that we teach, whether it's a parent-child relationship or financial advisor-client relationship, there's things that we recommend that seem punitive. It seems like we're just like, tell yourself no, like deny yourself. Well, I work hard, I make good money. Why can't I spend this money on what I want? Because we don't know what tomorrow is going to hold. We need to be good stewards of the resources that we have, and we have to have money available if something unknown happens, or to fulfill and save for a particular goal that you just told me. You tell me you want to retire in 15 years, but you can't do that if you keep spending $50,000 a year on a vacation. Like, there's priorities. We have to make choices. So this idea that we have to, again, we keep coming back to this idea of delaying gratification. Like, we're choosing, I'm not going to use the word suffering, but I can't think of a different word. We're opting to make a decision to deny ourselves now, to go through something that's hard for a greater benefit. Remember, I was having a conversation with someone recently, and the culmination of the advice was, you can afford just about anything, but you can't afford everything. Right? So you can afford just about anything. There's not much that we couldn't plan for you to go after. Yeah, you couldn't afford, like, if you want a vacation every year, you can afford that. If you want to spend a lot of money on a wedding for kids, you can afford that. If you want to spend a lot of money on custom suits and expensive watches or expensive car, you can do that. But you can't afford them all. Yeah, and that's the reality of financial planning, is prioritizing. Hey, what is most important to you? What gives you most? What kind of drives you? What excites you? And sometimes it's the simple things. It's not the material things. It's the experiences that drive us. And I would say one of the things that I'm most passionate about in this industry, man, is just seeing people light up when they talk about the things that they can do. Not saving money or investing money or whatever. When they talk about the things that their money affords them to do, the passion that they can fuel and fund because of the work that they do, the money that they earn. That's exciting. It's exciting.
Good point. Good point. Yeah, and it's delayed gratification, but it's just having the discipline, right? I mean, it's the same thing from a nutritional standpoint. It's the same thing from whatever. You just having that discipline, and it has to mean something. You have to want the other side of it to implement the discipline, you know?
I want to go back to 6 months. You talked about 3 months emergency savings. You said the importance of 6 months. You said, I'm going to get back to that. Tell us that story right there.
Yeah. So just as things went, I didn't necessarily foresee anything going on. I'd been with a major corporation for 14 years, moved all around the country. And I just, we were very fortunate. Things were going well. So as I kept saving, I had 4 months of emergency savings. And I was like, well, I wonder if I can get to 6. Let me just get to 6. Why not? So I got to 6 months, and then the rest was, we were able to spend and enjoy and stuff, but I just kept that 6 months. Went through some major acquisitions, mergers, and I was let go. And because of my tenure there, they provided me 6 months of a severance package. So I had 6 months of savings, 6 months of a severance package with kids that were 4.5, 2.5, and right around 1. And I was literally able to stay home for a year. Now I was interviewing, I was searching for jobs there, but I did not have to make a knee-jerk reaction. I was able to slow myself down. I will never get that time back, right? I knew I would never get that time back to be home with 3 little ones like that with my wife. And I was able to, we kind of pull the drawstrings, right? We lived a very humble life. We still enjoyed some small things, but 1 whole year, man, I was able to stay home. And so I have preached that to the hills, because I fully believe if I didn't have, not believe, it's a fact. If I didn't have that emergency fund of 6 months with the severance, apparently, it wouldn't have been there. And even if I had none with the severance, it would have only been 6 months, right? So because I was able to have 6 months emergency savings, it was a welcomed reset in my life.
And
yeah,
freedom.
that's the story you told over lunch when we were talking about liquidity.
And it gave you freedom to do what you wanted to do. I like that.
Work optional.
Yes.
Mm-hmm.
Work optional.
How old are your boys, Daniel?
They are 13, 11, and 9. One of them just turned 12 on Friday, 13, 12, and 9.
Okay. All right. You want one teenager and one knocking on the door. Good luck.
Yeah.
All right,
man.
Let's close it out with this. You got three young boys. There's just one lesson about money that you could teach them. We talked around a lot of different things here. What would it be? There's that one thing you could teach them. I'll tell you what. You can have. Yeah. I'll give you 3 things, one for each kid, and then they can share.
Well, that's interesting, because they do have different personalities. So for my eldest, it would be understanding needs versus wants. Understanding needs versus wants. There's a lot of things I want. My entire family thinks I need new clothes. I don't have holes in them. I don't have stains. I don't need new clothes. I'm good, right? They say I'm not trendy enough. I'm good. For my second one, his would be, he does well saving. He actually has saved more than the other 2 brothers. His would be protected for your interests, because he's also a giver. So anybody that comes to him, he's supplying their needs, or their wants, I should say, not their needs. And then for the last one, gosh, man, maybe save it for bail money. I don't know. I'm not even sure what this last one, Erik.
Save for bail?
I'm joking. He's not a trouble kid. He's probably going to fall in.
Is that the one whose piggy bank you got to protect?
No, but he will be.
We'll play this for him in another 10 years and see what they say.
You need to have your piggy bank with 4 compartments now, right? Save, spend, give, bail.
And bail money.
I want to capture one thing, okay? You prove my point about Dave Ramsay. I said, you can say 3 things. You said that's good because they have 3 different personalities. Financial advice is rarely prescriptive. There's rarely like one piece of advice that covers all people. Financial planning is very nuanced because we're all very different. What motivates you doesn't motivate Xavier. I got clients that would never drive a 2008 Honda. Xavier's good with it. So how do we
I
get them
never
to reach
thought
their
I would
goal?
up until now.
Yeah. So nuance is very important, you know. The answer to a lot of, hey, should I do this? Well, I don't know. It depends.
Hey, look, I've got to say this, right? Because we talked about this twice now. It is painful driving around in this 2008 Honda Accord. It's a great car, but it's painful. I miss my luxuries that I had in my other car. But as Daniel mentioned, you know, that's it's replenishing those savings in the areas that I've spent money over the last several months. So, but it definitely is painful driving it.
I feel your pain. I had a 2005 F-150 up until 3 years ago.
Mm-hmm.
I bought a little sedan just to get me through for a couple of years because I didn't know what I wanted, and I wasn't financially able to go get another vehicle. So that's why I was saving the excess. And then I finally got another truck last year, which I'm happy with. So I feel your pain.
It's a good looking truck. Daniel, appreciate your time, man. It's good stuff.
Absolutely, man. Enjoyed it.
Yeah.
Maybe I'll go get me a Ferrari.
Or Bugatti. Or Bugatti. Turn heads with the Bugatti. I don't even know.
Actually, give me a Corvette and I'm good. Let me get my Corvette and I'm good.
You had a Corvette.
I did.
Yeah.
I lost it in Katrina. One of these days I will get another one.
Oh man.
That's on the horizon.
All right, y'all. Hey, look, if you like what you're listening here, follow us wherever you listen to your podcast and share this with someone else. Y'all take care.